Hi, everyone. Welcome to another KE Report Daily editorial on Friday, July 18th, chatting with Dave Erfle, founder and editor of the Junior Miner Junky. We're going to focus on the precious metals sector, and I want to start off with what we've been seeing on the financing front, Dave. It's been a few weeks now, maybe even about a month and a half, that we've been noting financing activity has really picked up, and it's picked up not just in the big stocks, actually, maybe in some of the bigger stocks, seeing those $100 million deals or $50 million deals. Those are still around, but we were seeing a whole lot of that earlier this year. Now it seems to be the juniors and the slightly smaller developers' turn to raise money. As I said, I've talked a lot about this in the last couple months, but Dave, what have you been seeing? Well, what's noteworthy in your eyes?
Yeah, it's really interesting that financing window is opening up even wider, even though we're in the summer slow period where people are concentrating more on vacation than on trading. But what I'm really noticing is this week there were three $30 million financings for higher risk PEA stage juniors, and all three involved strategic partners taking a big chunk of the finance. That's what you want to see, right? I mean, you want to start to see these majors getting into these financings because, we've already seen more M&A activity. We saw Royal Gold taking over Sandstorm and Horizon Copper. And now recently this week, we've had Anglo Gold taking over Augusta Gold in Nevada. So, these miners, I mean, we got earnings season kicking off in a few weeks when Newmont reports on the 24th. I know they just had their CFO resign and their stock took a big dump down to test its 50-week moving average, but then it bounced. It hammered right from there. So basically, Newmont just caught up with GDX. But I digress. I mean, we're seeing margins are really going to increase in Q2. The gold price was almost $400 higher. And last quarter, Newmont reported costs remaining going down. So, costs remaining the same, maybe going a little bit up, going a little bit down, semantics when you're talking the gold price, $400 higher in Q2. And Newmont, they announced 1.2 billion of free cash flow in the last quarter. So I wouldn't be surprised of like 1.5 billion free cash flow in Q2 here. I mean, that's a run rate of 6 billion per year. These miners are just pumping out gobs of cash, and they have to replace ounces. That's what these investors want now, right? You short up your balance sheet, you're paid dividends, you're buying back shares. We want more ounces. So seeing strategic partners and strategic companies coming into these financings in higher risk juniors is very bullish because we're seeing not only silver leading the gold price now, we're seeing the juniors leading the miners. So that's what you want to see. You want to see the gold price consolidate sideways here in time because it ran up to 3,500 pretty darn quickly and got extremely overbought. So now it's correcting in time sideways within yet another bullish symmetrical triangle. I mean, the last time we had a lengthy bullish symmetrical triangle like this was when the gold price ran up right before Trump was elected, and then the announcement of him being elected was the impetus for a sell the news event for investors to take profit, and that's what they're doing again here when the gold price hit 3,500. But this time, the miners are showing relative strength, and the juniors are showing relative strength to the miners. The last time when we had this long-term bullish symmetrical triangle, the gold price was up by the end of the year. The gold price was up 27%, yet the gold stocks were only up 13%. Well, now the gold stocks are providing the leverage that they're supposed to provide. They're up over 2 times the gold price.
That that is the biggest change we've seen right now is the juniors, the smaller stocks closing this valuation gap to the major stocks because the major stocks and those high quality stocks were the ones outperforming the broad market. But Dave, it's something that I've been saying to everybody. We do still need gold to make another leg higher, right? If gold just continues to consolidate sideways, then we've seen this story before where the juniors play catch up and then, well, again, we need those majors to make that other leg higher to give that impetus to the juniors to keep catching up. So time-wise on this, when do you think gold would need to make another move higher to keep that interest that is clearly in this sector?
Well, if you take a look at long-term technicals here, 3,300 gold is acting as support right now, is acting as pretty good support, but 3,200 is stronger support. So, if we see gold lose 3,300, then we could see 3,200 being tested. I wouldn't be surprised to see that, and that would remain in a sideways consolidation, which would be very bullish. And what we're seeing right now is the miners are testing their 50-day moving average along with the gold price. So the miners are pretty much finally in sync with the gold price now. Yet, as far as the valuation is concerned, they still have a long way to go as far as the valuation is concerned. I mean, a lot of these companies are trading as if gold is still $2,000 an ounce, and yet the market is starting to price in $3,000 an ounce gold. So, as far as a correction is concerned, we've already seen about a 10% correction. So we could see a little more sideways action. As a matter of fact, I'd like to see it. You'd like to see a stronger base because the target in the GDX is 60 once this consolidation is over. So, the longer it corrects sideways, the stronger the base.
So, Dave, to this point about earnings coming up, as you said, the market is, I think, starting to price in higher gold prices. We're seeing analysts, we're seeing banks raise their forecasts as well. But these stocks, they do still need to show growth, right? That's been the one thing missing is that, yes, the gold price, the metals prices have done what they needed to do, but these companies, it's hard for them to grow. So, yes, M&A does that. But why this quarter would the market or investors be mispricing earnings if we know what the gold price is? And these companies are very good at forecasting production, so we can price out what their production is.
Well, I think it's still a fact that they're still enamored with the stock market, right? The Nasdaq just made another all-time high. So, because if you take a look at investor allocation, it's still, you know, 0.5%. I mean, it's, average allocation of global investment into gold has been closer to 5%, and in gold stocks, it's been closer to 2%, which is still relatively low. But right now, it's half of 1%. So, the generalist investors still aren't coming into this sector yet in mass. I mean, that's still in the future.
So where's this money coming from? All these companies that are raising money, and now even all the small ones, this seems much more like risk capital because it is going into the even smaller companies. And as you said, some of the higher risk developers, I've noticed a lot of money coming into the small exploration plays that don't really have a whole lot except for a new story and probably a new project. Where is this money coming from?
Right. And some of those exploration plays are having to attach a half warrant. Yet, these other companies that are PEA stage and feasibility stage, they don't have to attach a warrant. But this money is coming from sector professionals and like I said, strategic partners. That's what you want to see. Especially, like I said earlier, when you see a PEA stage junior, attract all this capital, and especially from a strategic partner, that is very bullish.
Well, one other thing that we've noticed that is a total change in the market is that when financings are announced, the share price isn't crashing. Sometimes if the financing is announced at, let's say, a 10 or 15% discount to market, yes, the share price does correct down to that. But then I've been noticing these financings getting closed very quickly, usually upsized, and then the share price performing on the back end of that. Look, in 4 months, well, now about 3 months' time, we're going to have a lot of shares come onto the market. So, what will you be watching as this progresses from all these companies that are cashed up, will have news, but will also have a lot of shares hitting the market in 3 to 4 months' time?
Yeah, this is another major sign of a bull market, Corey. Before the juniors started to lead, you could sit back and you have juniors on your watch list and say to yourself, okay, I really like this project. I really like this junior, but they're going to need money. So I'm going to wait for the finance to be announced. And I know I can get it a lot cheaper. Well, that's not happening now. As soon as the finance is announced, even if the stock is hit a little bit, it's bought right away. And then it ends up on the day. So these financings are being bought. That's what happens in junior bull markets. financings are bought, and in junior bear markets, financings are sold. So the street no longer can play games with these stocks either. They see a company, and they see a company that announces very positive drill results, but they look at the balance sheet and they say to them, and they say, well, look, they're gonna raise money. Let's short this stock, and we'll be able to get it cheaper. Not only that, we'll be able to get at least a half warrant or maybe even a full warrant. They can't do that anymore. That's another big game changer for this sector right now.
Have you noticed money being focused anywhere in the juniors? Is certain metals, certain jurisdictions, certain plays, or has this really been just this broad financing window for a lot of different companies to raise?
Yeah, it's been across the board, and we were seeing it in copper too. Two of those companies that I mentioned, those PEA stage companies that I mentioned this week that raised $30 million, two of them were copper focused. I mean, one is North Isle and the other is Faraday. They announced these $30 million financings, and North Isle announced Wheaton Precious Metals taking some, and Faraday, I think it was Lundin that took the whole thing. So this is very positive.
Yeah, it really does seem to be. Let's talk about some of these other metals. Let's start with silver because silver, just like the juniors, has been playing catch up. Really, silver, I think, just is more the risk on, bulled up money. It's a smaller market. It moves quicker, both up and down. And the stocks are a lot smaller than the gold stocks, and there's just simply less of them. But that gold silver ratio has come down quite a bit, and the momentum that was in gold seems to be in silver. What are you expecting silver to do from here, though?
Yeah, that's the thing, Corey. I mean, that's what you're seeing now. You're seeing silver is showing relative strength during this gold correction, which is very positive. Also, you're seeing that gold silver ratio now going in the right direction, which is down. It's now below 88. So silver last Friday, it jumped to a 14-year high. It had that consolidation process right after it broke out above 35. It consolidated in a bullish flag for a couple of weeks, and then following the copper breakout, when copper had that huge move, that 13% move on a Tuesday, it created this huge flagpole, and it's consolidating bullishly in a flag on that flagpole. And silver now is doing the same thing above 3750. If you take a look at the gold price, 3300 is acting as good support, and in the silver price, 3750 is acting as good support. And I think it's a bullish sign that we're not seeing, like, well, we've talked about this before, when silver has these huge moves, we have a short squeeze, and the silver price gets out of control on the upside, and it marks an interim top. We're not seeing that this time. So I don't think this is all silver squeeze. I saw a story on Kitco where they think it's Russia that's buying a lot of silver right now. And the story made a lot of sense. You can go to Kitco and read it. But I think that's very bullish action when you see silver make these large moves. It consolidates in a bullish flag, creates a base, moves up again, and does the same thing. And that's exactly what the shares are doing. Because if you take a look at the gold stocks and silver, right, they were acting in unison as weaker than the gold price as it moved up to test $2,000, for like 4 years. Gold stocks and silver lagged that move. Well, now they're showing relative strength while the gold price is consolidating its huge move already. So this is all very bullish action for the sector. I wouldn't be surprised, Corey, to see the gold price reach that $4,000 target this year and the silver price reach its all-time high target of $50 this year. That would be a gold silver ratio of 80-1. So that's very plausible after these consolidations.
This really is just the process that you like to see in a bull market. But again, the next step, I think, as much as silver has caught up, as much as the juniors have caught up, is then gold to take the lead again. I think we're all waiting for that, and that would be encouraging if we can start talking about gold at all-time highs again rather than this consolidation that it's had. But it was due for a consolidation on the copper front. Look, copper really benefited from that Liberation Day 2.0. A lot of the other markets and countries that Trump went after, their markets didn't really do anything, but the copper market reacted strongly, not so much in London on the LME, but more in the US. But again, those are tariffs for copper coming into the US. What was your thought on how the US markets reacted to those copper tariffs compared to what happened in London on the LME. Why the disconnect in your eyes?
Yeah, it was interesting. Investors were really caught off guard, right? I mean, the market had been expecting a much lower tariff rate. I mean, when that Commerce Secretary, what's his name, Lutnick, he stated that the copper tariffs are going to be imposed later in July or August. I mean, shortening the time window to front run the new import tax. So it's all on this that Lutnick is opening that investigation into foreign copper imports under that Section 232, the Trade Expansion Act. And the price rally is mostly attributed to a significant reduction in the London Metals Exchange copper inventories. They've fallen by, I think it's like 65% year to date. And the traders have been redirecting those copper shipments to the US in anticipation of the potential Section 232 tariffs. And that led to a sharp backwardation in the market. So copper futures, they were trading, I think they're still trading at a record premium in New York compared to the LME because of that.
What's the risk, though, that these tariffs don't go through? That the whole taco trade, which the market seems to be ignoring what Trump's doing, if Trump backs down, could we see copper pretty quickly back to that $5 level?
I mean, $5 level, I wouldn't be surprised to see it tested again. Yeah, I mean, $5 was significant resistance for the past 4 years, and now it's attempting to become support. But I mean, if you look at the share price action, like I said, it's creating a bullish flag on that huge flagpole from last Tuesday. So yeah, I mean, the only thing that would take it back down to 5% would be the reduction of those tariffs. And Trump's on again, off again, on again tariff threats. Absolutely, that could do it.
Now that we have copper at this higher level, talking about again momentum in copper and some of the bigger names doing well, still noticed a lot of the explorers struggling. Do you think they will get some more attention as again the bull market plays out as it should, kind of textbook wise, money filters lower?
Yes, I mean, a lot of these copper juniors, some of them are starting to come alive, but a lot of them are still massively undervalued. And it's just like a lot of these later stage copper juniors as well. The market is fighting catching up because a lot of these juniors that are strong takeover targets, at $2,000 gold, nobody cared. But now that the gold price is attempting to make a strong floor at 3,000, a lot of these companies look really undervalued. And even though some of them have moved up 2 or 3 times, they're still massively undervalued because we were in a bear market for so long. Nobody cared about this sector for so long. I mean, all you have to do is just take a look at the TSX Venture, right? It continues to make 52-week highs week after week after week. It's bifurcating from the miners. It's got a long way to go because it was suppressed for so long and depressed for so long.
Yeah, that's also again showing that money is rotating further down the food chain. That's the venture exchange. People are more risk on right now. Let's hope it continues, but again, let's hope that the safer money, the bigger stocks also can benefit in the near term. Dave, I always ask you this, and you always say, no, you're happy with your positions, but are you doing anything with your portfolio?
Yes, I've been forced to, Corey. I mean, several of the companies in my top 10 have tripled or close to being tripled. So when they do, for risk management purposes, I go ahead and sell 1/3, and that takes the risk out of the stock and my investment capital. I take that and I invest it into something else. But a lot of of course, all the gains I take out of the portfolio. But when I do sell 1/3, some of those is some of those sales are investment capital. So I have been adding to a couple. I have added this week to a couple of stocks that I introduced to my subscribers. I think one in May, and I think one in June. I added to those two, and I do have another company that is very close to tripling, and my limit order being filled very close to that happening. So when that happens, I'm going to be adding another position. I've been speaking with a few copper related juniors on my JMJ watch list. I have a watch list of 20 companies, and I'm getting ready to make a decision on which one of those companies I'll be getting into, because I'd like to have a little more copper exposure. I have some, but I'd like to have a little more.
All right, Dave, we'll wrap it up here. Look, again, bull market. It's fun to be in a bull market. While a lot of other markets are still moving higher, but at least recently we have seen some of the outperformance, especially in the silver stocks. Those were just flying. And some of these juniors, while coming off very low levels, are also doing very well. So that rotation of money down the food chain, again, just waiting for gold to make its next move out of this sideways consolidation, and hopefully some of those majors to keep moving forward. It is going to be interesting to see earnings season, most importantly, the reaction of the markets. Again, Dave Erfle, founder and editor of the Junior Miner Junky. Click the link in the show notes to follow along with Dave and his portfolio. Thanks for your time today, Dave.
Thank you, Corey. Always a pleasure.